All right. Let's get into what time it is. Okay. We got 12 minutes to it. Let's go get into what we're looking for today. Show that black. Let me fix it. This thing been tripping. Let me fix this real quick. Give me 1 second. What's going on with it? This stupid update changed everything. All right, that should be good. All right, cool. So open up chat. Okay. Open up OBS. Sit that over here. Now we good. Okay, that's better. All right. First of all, good morning, good morning, good morning. So today is Wednesday, We're in the middle of the week, and as you guys see, we're still in the same price action we were dealing with yesterday. So nothing changed when it comes to what we were looking at yesterday between those two ranges here. So one thing I want to show you, just a quick glance at the weekly. Let's see what this weekly, we had this weekly consolidation, and we're pushing up out of it, taking out that high that we were referring to earlier. With that midpoint, price bounced off that midpoint, and now it's in the continuation up. So that's why price is consolidating, because it's trying to figure out now if it wants to consolidate here, or we're going to continue going up or continue going down. So you have a bias, a multitude of biases, depending on what you're looking for. Because if you're looking for a buy, then you're at a high. So that's a possibility of price just falling off. But this is a weekly chart. So this is just looking at how that candle can close. We're not trying to put no heavy bias on what we're looking for in a weekly. Just simply trying to look at it and see, okay, is it going to go up or is it going to go down? Now go to a daily. Let's look at a daily real fast. So, yeah. So, daily, fairly simple. We have this one. No, this one. This one. So we had this imbalance here, and this imbalance here. Price took out this high. We created this sweep right here. But looking at this push up, this will be the range on a daily from here to there. So you see on daily we're inside of a premium here, and we did take out that weekly high, so that just ties to what we're seeing on the daily, because once highs are taken out, then that's price sitting inside of a premium, and then we can get a drop down from there. But this also could be a continuation to go take out that high for Thursday of last week. So not jumping the gun yet. Let's go along to the 60-minute and look at what we seen yesterday. So boom, these two hourly consolidations that we had yesterday, that we were sitting in between, just going back and forth. We came back to the higher one and just trying to see how price is going to play out inside of this area. So now we have a general area in which something can happen inside the price. We already swept Asian range low, we broke Asian range high. So just trying to see how price is going to play out inside of this area after the market opening. So now let's get it together. So 15-minute here. Oh, 15-minute here. Focus on current price. 1 hour here. Focus on current price. And super 5-minute. Just want to see how price plays out. Just waiting to see if it's going to give us the momentum we need when it comes to looking for the right trade or the right trade idea. No need to rush in anything, as always. Just waiting for it to come to us. So we know that we're at this consolidation now. So let's say you're at this consolidation and you're like, okay, well, I don't know what price is going to do. Well, look at all these wicks back and forth at this consolidation. All those wicks on the 15-minute. Just back, forth, back, forth, back, forth, back, forth. So all these on the lower time frame looks like opportunities possible. this is the 5 minutes, so it doesn't quite look like opportunities. But as you go down, it'll look like a lot of opportunities. It's not. It's because you're at that consolidation. Unless you're looking for small scalps, we're not looking for that. So we're waiting for price to open or market to open, and then from there see what type of volume we get from there, and navigate from that standpoint on. Just waiting for the market to open. Want to look at gold, but I'm not going to look at gold right now. I want to focus on NQ, get in sync with NQ, especially at this consolidation. Minutes to market open. Get my stuff set up on my laptop. Let's get it. Okay, so we're getting this expansion up off this, up out of this consolidation. So now we just want to see that initial expansion at the market open, and then from there see how, when it consolidates again. Because price is now going to take out all these highs here. So just see how it reacts, taking out all these highs from yesterday. And then see if it wants to continue up. And if it's a big continuation up, oh well. Let's get it. Nice push up. That beginning opening is always showing you what type of volume you're going to encounter for today's price action. If it's super aggressive in the beginning, then you could be along for a wild ride. If it's real moderate, then you can look for steady trades. So you want to measure that opening volume and see how it's pushing down or up, or if it's just sitting still, and then use that as a confluence also when it comes to looking at the trade. Okay, so let's say you have a lot of volume and then you have a sell model or buy model, and it's hitting a specific area. If it's not aggressive and you have aggressive volume, then what's going on? Is it a good one? Is it a bad one? It's based off of where you at in the market and if it's suitable for you. So now this nice push up. And stuff like this, you don't just jump in. You don't go to a lower time frame and like, let me chase it. No. Don't chase nothing. Everything needs to come to you. If it's not coming to you, it ain't your trade. Okay. There's that pullback 15 minute. Let me do side by side. 15 in 1 hour. 15 in 5. Wait for it to fizzle out. Let me actually look and see really quick. Oops, I did 600 hours. So we do have this over here. Right here. And then from that inversion, that first confirmation, you can look at this one. Look at that. The fact that it's so aggressive right now is like, do you take that drop off or a continuation down? The way it's aggressive like this, you don't know if it's going to punch up and take that out and then drop to the downside. So in this case, you want to allow market structure to phase out or fizzle out to give you an indication that it really wants to go down. Now, if this wasn't right at market open and then this would show me something like that, then I'll be a lot more like optimistic about it. But right now, I don't have no interest in it, just because it's the market opening, and that volume from the market open can be tricky if you're not being patient. So let's go 15 minutes, see what that's doing. Let's see if it can get us. So, but also what you would like is that it came right up to here and then stopped. That's an indication too. So look at the 5 minute. Now we got a key area to focus on. Put this over here. I'll put the hour back on in a second. 5 minutes in. See how it pushed up. And this is why, especially when you're looking for buys or sales, I like limit orders sometimes, but if you have, especially depending on the model that you're looking at, what time is it happening? Because you can have where you have a lot of volume, and then this can very much, let's say it did want to go down, it can very much just do this, and then that could be a very long wick, and then once that candle closes, the body's below it, and then it continues down. That's a possibility. But when you get a limit order gets hit, and then now you're dealing with this, you're in drawdown, and you had a certain stop loss for yourself, and then it gets hit, and then it goes your way. It's hit or miss with that, but you got to be okay with that. So that's why I don't use limit orders. I like market structure. I mean, not market structure. I just like having my manual orders entered, just because I like to see the market. And depending on how the market is playing out, sometimes I'll get right in right when it touches it. Sometimes I'll see how aggressive it is going to it. I'm like, let me just sit around and wait and see how it plays out inside of here. And me having that type of bias sometimes also makes me miss a trade. But you got to be okay with that. I'd rather miss it and also not deal with the headache of being in it, and then it instantly, as soon as I get in it, it pulls up even higher. And now I'm just dealing with all this BS instead of just waiting, because I seen how aggressive it was going up. Like, this is 9:30 open, and it punched right up there. So if you're looking for it to stop and then go down, you're probably expecting too much from the market at that moment in time. Now, could that happen? Possibly, yeah. Anything can happen. But you're looking at just from what you've seen, your perspective based on how many times you've seen price push up and get to a certain area and then stop. What does it do? Usually it gives you that crazy wick and then it goes down. But in this case, you can have it to where it just continues up. This is where the patience comes. Let me look at the hour now. Put that back on the chart. Because remember, this is a hourly confirmation, not a 15-minute, not a 5-minute. Just gotta have patience. Oh, what alarms off? I got the alarm on. You know what, Brennan? The buy or the sell? Okay. So what made you get in? That's a thing. Because, well, for one, I see you got in, but your stop loss is, you got it above, but where was it at before? you see the 5 minute, 15 minute doing all this, but this candle has 30 minutes till it closes. Well, 20 minutes now. And this confirmation and imbalance or inversion is on the hour. So you want to see how this closes, and the way that this closes will dictate how you look at this on the 5 and 15 minute. Two, 22, 9, 10. That was where I put mine. 22, 9, 10. So you risk 50 points on that. So you risking $1,000 on that trade. Okay, gotcha. Gotcha. Waiting for that candle to close. Let me go look at a 4 hour really quick. Now this push off of this, and now that's coming to here, and then we are breaking that and this here on the 4 hour. So this. But yeah, 4 hour. Turn stuff back on. Just watching that hour. How the hour closes. push up, big push up. Like I said, we're looking at that 4 hour here. We got this hourly. That price is blowing through, and then we're going instead of this 4 hour. Let's look at the midpoint of that. So you see how we had this hourly. This price is broken. Once this candle closes, then you want to take this confirmation and inversion off. And that's why, like I said, you had that hourly confirmation there. But you see, this is price bouncing off of that 4 hour consolidation. And then we had this 1 hourly consolidation that price is bouncing off of. It's a straight up move. Wait for it to fizzle out. Watching that midpoint of that 4 hour wick currently. See how price is going to react off of it. Not reject, react. Because at this point, all I want to see is if this is going to become invalid, we're going to use this as a stepping stone to continue up to the upside if it doesn't take out that high yet. Because what you want to see now, if you're having expansion like this, you got expansion. So what are you expecting now? Consolidation. And then from there, that's going to take a minute. So depending on what time frame creates the consolidation or how it creates it, it's going to depict how you look at price action going towards today, later on today. No need to chase nothing. Because you'll realize these happen, pushes like this happen all the time. And if you always in the mindset of chasing it, you don't think that you can obtain these type of trades. And they happen all the time. But think about it, this is the first big push we had in price action in a minute. Like, I would say, shoot, besides this one, was what day was that? Third. Then we had one. This is the second. And then prices consolidated. So we had two big pushes out of like a couple weeks. Like this. Let's see. Like this here. This retracement here. You could consider this a push, but it's also just a retracement back into consolidation. This is pushing away from price. This whole push here. So let's even take this push, or let's take the last push here. So from there to there, let's just measure it. It's that push. And then from here to there, that's that. So that's already past that. Already past that. That was this whole day. Yeah. Okay. 8 minutes left to that hourly candle closes. That by second entry of my first. Same stop loss, but less risk. Go on. Let's continue and I'm just thinking of traffic. Trade to the team. Right. So yeah, the question is, what was your initial risk? That's the main thing, because what did you see for your risk? This candle don't hurry up and close. This is the hard part. This is being patient. I just want this candle to close so I can take this off. Even though I can already see it's gonna close above it, I want to wait till it closes so I can take it off. Checked. Now, even when you take this off, price can come down here and bounce off of this and continue to the upside. So you want to pay attention to these levels. The reason I'm taking it off because I don't want to interfere with what I'm looking at with current price action. That 5 minute busy, price bouncing off that 5 minute busy, but 5 minute, no concern as of right now because I'm waiting for that consolidation, so it's gonna take a minute. Okay, I'll go ahead and take this off in a second. Just put it in the folder. Take that off. Okay. Now, you focus on current price action. So we know that this line right here is the midpoint of that 4-hour wick, which it is using it as a confluence to see if prices want to continue to the upside or are we going to start to get consolidation here. It's going to take all day or it can happen pretty quick. While we wait, let's turn around. There we go. Take a quick glance at this, fellas. Consolidation. Not going anywhere. Price push up to contest high. Push up here, down. Gonna give us an inversion here. A confirmation push up. Yes, sir. This was gold. Targeted edge and range high. Okay, let's go back. Great shadow. See if we get any consolidation. While waiting on that, I'll be right back. Just waiting on that. Let's see. Now, okay, with this, you're in a market now where it's expanded, and you're asking yourself, do I participate? Is this where I say I'm done? This is where I say no trade opportunity today? You have to come to a conclusion with that as well. That's something that you definitely want to not have yourself too exposed to the market, because then that makes you like, man, should I take something? Should I take something just because I'm here? No. So in that case, like times like this where market pushes up, I'm not a part of it. I'm not dealing with it, and then now I'm waiting for that consolidation. You're waiting to see based off of time how price is going to go throughout when it comes to consolidating, a retracement, a nice size pullback, and seeing if that's the possibilities of price that in which it wants to do. So in this case, you can follow 5-minute price action and look at consolidation. You wait for it on a 15-minute scale, but now that's every 15 minutes. So a consolidation on a 15-minute can take anywhere between, you're talking about at least three candles. So that's 45 minutes right there. So I would say an hour of just back and forth consolidation. But if you look at it on a 5-minute, this right here is pretty much consolidation. It's back and forth. But I would want more candles to indicate this consolidation. And then like a slight breakout. So like you have these candles where they print like this, and then one candle like one candle that kind of pushes out of that. So like this. So let's say a candle did like this. Like one candle did that. And then that will confirm like, oh yeah, okay. This is the consolidation now. Because we made the consolidation and then we broke out of it. So this is like, it's like confirming my consolidation. For those that ask, when do I look at consolidation, or when do I consider it consolidation? That'll be it. Like this, how this candle is now. If it pushed down like that, and then it closed like that, we'll consider those three candles at the top consolidation. Look, you see how this body is closing. This body is closing inside of this price action right now. It's still part of consolidation. Like I just have these two screens on my laptop. I have these two screens bigger. I'm looking at one or the other. But I'm also looking at gold. Yeah, like by this time, I'm walking away. I'm literally walking away, and I'm coming back to it maybe an hour later, and just seeing how prices playing out. cutting out, Brendan. So it should be working now. Go out and come back in and try it. But let me see. It should be working. It's telling me that it is working.
Hello?
There you go. What's up, my guy?
Hey, my bad. I had to enable push to stop.
Oh,
What's
okay,
up?
okay. What's going on with you? You back in the
It's
swing of things, huh?
yeah, I'm trying to be. I got some things in the works I'm trying to figure
Okay.
out, but I was working, so I'm on my phone.
Okay.
I've been paper trading.
Okay.
And so for the first entry,
Mm-hmm.
I put it at 940, and then I put my stop loss at 22,910 at the last low.
Okay.
Because that was right above the BISI that that basically was thinking it was gonna bounce off of.
So your focal point was the BISI.
Yeah.
Okay.
Because I had that BISI, and then I had the hour that was above that. And I was
Okay.
like, okay, if it bounces off of the last BISI, that was the 15-minute one, and goes into the area of the hour one, and traffic's still pushing it, I was basically thinking, okay, that might keep pushing it up.
So what was your initial
initially,
risk?
I took that trade. That's the thing. So I don't have the that box that we usually use where it's blue and red.
Uh-huh.
I wasn't able to use that because I'm on my phone.
Okay.
But so from the price point of 22,940 was going to be my entry, and then the price point of 22,910 was basically where my stop loss was. I'm not sure how much risk was in between there. It was a short distance, so I was assuming it wasn't too much risk. But I was pretty confident in the confluences that I was looking at for that
Yeah.
trade.
If you did So the thing is, what were you aiming for?
So basically, I was just aiming for, uh, I guess I would say pretty much the top of that hour busy that was above.
Okay. Okay. Because so that the thing with that is so the trade played out, but the thing is the way that it played out, things like that, it will just drop straight back down. So you remember how? So it's been a while since you've been on it. So
Yeah.
getting in the swing of knowing what to look for when it comes to the model and finding the inversion and the confirmation and know which one to look for. Because the thing is this, you want to be consistent with whatever you're doing. So like, let's say you're buying off of a BISI, you're buying off of a CIVI, and you're targeting the hourly highs and lows. Now that's not saying that can't work, but if that's something you're consistently doing, and then okay. But the reason I didn't take anything just right now is because just the way it looked. So it's bouncing off a 4 hour and 1 hour, but I didn't see the model that I was looking for based off the risk that I wanted to risk, and then the trade took off. So in that case, said you had the trade that played out, but what you were looking for or what you needed to see inside of that, you had the BISIs, but those BISIs also could have been inverted. But you did have the 4 hour and hourly marked up. I would say this: when you get home, mark up that as if how you seen it today, and send it to me, and then we'll talk about it. Can you hear me? Hello? I think your sound messing up. Can you hear me? I don't know what happened.
Go ahead.
Oh, there you go. Can you hear me? Can you hear me now?
Yeah.
Okay, so I was saying once you got home, send me what you seen and how you marked it up and when it took off.
Okay.
Yep, and just show me how you got to that point off of those BISIs and off of those CIVIs. So I can
Okay.
see
No problem.
exactly what you were seeing, so we can fix what you were seeing and go off of what you should have been seeing and how you should have been seeing it, because the whole thing is the consistency part. Trades that take off and then they go one way and you got it, it's cool. But if you can't navigate all the way until that point, it's just like, okay, like what did I do? What was I seeing? Okay, I seen this BC, I seen this CIVI, it bounced off of here. But okay, what confluences did you have? What confirmations did you have? What time of the day it was? You had the market opening. So this trade you took before market opening, looks like it. Trying to see the screenshot. Oh yeah, there you go. Yeah, send me your once you get a chance, send me your markup.
Okay. No problem.
Okay. Okay. So now we're getting that push down. So like this is what I was talking about earlier. So we have this push down right here. This here is that consolidation. So now this will be a focal point because you have the expansion, but this is a smaller consolidation in comparison to everything else that's happening right now with this hourly imbalance. Now you don't know how far price is going to push down, but knowing that you can follow price or get in sync with it based off of the consolidation and the expansion, then you can gravitate off that, and then that can help you when it comes to like stepping stones on where price is at. Like you have this consolidation right here, but then you also have this floor right here. But remember, this is all based off of a 5 minute. This is no backing of a higher time frame. So when you're in clear waters like this, what I mean by that is just simply that price is pushed up or expanding it in a big amount. Even though you can go look at past data to see where you're at, you also want to look at where you're currently at, what price action, and dictate it off of that as well. So let's see. Go here. Let's go here. So you see we have this wick, this long wick, price pushed up, came down. Let's see if when it came down to that wick, did it do anything specific? So what I mean by that is just marking this up here and then dragging it over. And so yeah, so see how we broke above it, price came back below it, and then this candle went into it, and then the body that kind of respected the midpoint. So I can drag that over and see if price anything happened with that. So let's just drag that over and see real quick. Stand to the right. So it's that same level right here, and that is right at the high of this confirmation. So keep that in mind. What else is over here? From a 15-minute perspective, you got this tiny, and I mean tiny, ceiling, should be just in there, right? Just that, there. That's about it for that. Look at the 5 minute real quick. This stuff I'm not keeping on my chart. I'm just looking at it really fast to see. And look what you have here. Boom. Boom. And look. That. So there's that consolidation. This is that inversion and confirmation in 5 minute. Got one more thing real fast. All I'm doing right now is just getting in sync with what's going on. We have right here that initial stop loss. Drag that over. Stands right. Oh yeah, so look. Scattered bodies, all these wicks, right? That initial stop loss. And then drop down off of here. And all this is doing is just getting confluence when it comes to where prices at right now and what's going on. Just because you have this sell model over here doesn't mean that I gotta take it because it's a sell model. But you also realize that this is an hourly candle, and that hourly candle can just continue pushing up. Oh yeah, it did play out. Okay, let me show you guys. There's that push down. And it just has this floor, this floor, this floor, and this floor to deal with. So heck? I want to have too much on my screen. Look at that like that. Because now we know everything that's happening up there. Like I said, when I have too much going on, I want my chart to be clean as possible. So I put it in folders. Kind of look at like right here. Looked at these levels. Like this confirmation level you see right here is 23,084. And remember, we at 23,000. That's a big figure level. So we're in that 23,000 range. Candle closes. That. This candle isn't closed yet. Yeah, wait till that candle close. Because depending on if this is your selling out to take it back to the downside for retracement, well, shoot, may not be coming back now. That's a crazy push to the downside. Rejecting hard off that 23,000 level. This price broke 23,000, and then we're getting that clean rejection to the downside. Edit up, edit up, edit up, edit up. Look at that rejection. Ooh. Okay, that kind of close. Spot's close, so is it gonna pull back this far? It's a lot. Ooh, ain't that bad. 30 points. 30 points. It's gonna come back to consolidation, maybe. Still gotta deal with this one here. And then price just trying to close this imbalance here on the hourly. So it's that right here. What you see is this high is the high of the consolidation. Go figure. Candles like this, whereas there's a big candle up and a big candle down, called it railroads. They're like railroad tracks. This price gonna go back up 60 points. Ish. Price literally slept that high at 23,102. Boom. To the downside. I'll just wait to see where it's gonna settle at. Let's wait for now. And then you already know that this off of this high, you already know that wherever it settles at, just from here to here, it's already in a premium. This general area here, that's obvious. Here to here. But I'm gonna make sure that you're aware that this is the range that we're in right now. Well, 23, 17.50 is our midpoint. And then we start creeping back into that 23,000. And then that'll be price showing if it wants to fail and then continue to the downside. Well, remember, it's just trying to close this imbalance here. Would have been cool if it would have went down, closed it, and then pushed back up. But it left it open so far. So 20 minutes left. It could very much pull back up, pull up, and then push right back down and close it. So now you have a second one here, but look how much risk that is. 50 points. No way. I will pass. I don't care what it did right now. Because a lot of times too, well, not even a lot of times, all the time, your trade is not based off of your take profit. Your trade is based off of your risk, initial risk. So if you have a lot of exposure to the market with such a big risk, then all it takes is the market to go the wrong way, not your direction, and then now you're dealing with that. And then that creates tilt, that creates greed, that creates bad discipline habits, and then you're not being consistent because you're always changing stuff up, thinking that what you're doing is not working. That's why my risk is just like I want a decent risk. That way, if it does stop loss does get hit, cool. Just when it didn't play out. So now this candle right here on the 5 minute, excuse me, on the 5 minutes, create that swing low. Let's see, because the price gonna go and take out that low for a lower low. I'll just walk it down. Just think about that. This was a pretty much 150 point push and they reversed. Majority of it. So if you seen it and you just chasing it, and then it pulled back down, you gonna get that same feeling. Man, I should have been chasing. I should have caught this. I should have caught this. Like, no. And there was a small, tiny opportunity, and it was on the 1 minute up for this. Now I'll show you real fast. Real quick, like I just would like it to set up a little bit better, and not just on the 1 minute. But let me show you. Here. And it's this one. And there. That's that whole drop down. But you'll be targeting the low, but then what? The next low, but you don't have nothing to anchor on besides the imbalances. So, but if this would have pushed down a little harder, created that low here, okay, gave a nice push up, taking out that high, and then did this, and then it had a nice target to the downside for an initial target, then cool, because that'll give you enough risk to take out that low and then continue to the downside. But even with this, just going from here to here, that's 11 points, and you're risking almost 20. So, gotta measure what you're looking for. Don't just take it just because it's there. They get caught up. It's going to close in the imbalance. It's there. Get that yellow. close here. I will look at the midpoint of this, but I can already see that price broke it with that body. Be verified. Yeah. I was looking at it though. Push back up. And when you're watching, I want you to watch the sequence of the 15, the 5, and the hour. Look at what the hour is saying. Look at what the 15-minute is giving detail on the hour about. And look how the 5 minutes trying to give detail about both of those. And how they all are in conjunction with each other. Because they're all telling one story. So when you're looking at a 1 hour candle and you're just watching it, you're more so watching it not to see how the candle closes. That is part of it, because you want to see the candle close. But especially if you're trading within a session, you're watching to see how the candle flows, how it pushes up, how it pushes down, how it rejects, the flow of it. The 15-minute is more framework, highs and lows and things of that nature. And then 5-minute, that's everything. The flow, highs and lows, imbalance is everything. But with that hour, I'm just watching how the candle is flowing. Okay, so we rebalanced that imbalance. So this is now closed. Okay. Oh, you got a crazy setup right here. That's too close for comfort though. Look right here. Very much go through that. Like it's not even there. Because you're also looking at the expansion that we just had to deal with. Price gonna play off of it. Five minutes left to that 1 hour candle closes. Look at that body. Let's watch this for the last. Watch that 1 minute real fast. Consolidation. Consolidation. See how you have that model, but look at that 1 hour. Because remember that with this, the initial stop loss is here. Excuse me. But remember, when the initial stop loss is broken, it's also telling you something. It's telling you that if it closes below it, that could be price trying to turn around. So whatever you're looking for that model to do, it can do the complete opposite. Now it could play inside this consolidation range, but when you have 2 hourly candles like this, you gotta treat it with caution. Seconds left to that close. Watch this body. Excuse me, y'all. I'm trying to yawn. My bad. just want to see how it plays off that 5-minute level. Because why did it close like that? Looking at that 1 hour candle is hilarious. Also look at the midpoint. This is creating that swing low. This price can very much run up into this imbalance right here on the 5-minute. And then, but it also could do this and then continue up. But you're looking at how this hour is just straight up and then straight down. So like, what is this candle gonna do? Back to that imbalance. There she could go. You gotta watch price action. You gotta put it in something like this. Get you one of these. Have you a notebook. sure you're putting stuff in it, and make sure you're documenting how you see different things and it's throwing you off or any type of confusion, and you document it. This will go a long, long way. Videos, pictures, screenshots, that's all in your phone. You're in your phone all day. You want something that you can see on your desk. Remember, I did the same thing earlier when the bodies was at the imbalance, and then it pushed up and closed inside of it. Price could be price. See this right here in 1 minute. Right there. Alongside what you're seeing on the 5 minute. Watching how that 1 minute creates that information. You see how we're sitting in this zone right now. It came straight to there, stopped, and then now we're sitting inside of it. Everything is done for a reason. It has a purpose. You gotta figure out why. Whenever you have price that just stops somewhere, figure out why it's there. And it'll probably lead to the rest of the context clues you need to figure out the story on what price is trying to tell you. So 4 minutes out in the stream, so hopefully get a nice push. But see how this price action is real one-sided, pause, one-sided, pause. This is where you kind of just sit on your hands and just observe it and more or less take notes on, how you're seeing it or how you're seeing it play out. Consolidation, consolidation, consolidation. All right, man. Y'all stay patient in this wild market, wild wonky market right now. Don't go in nothing that you don't see. Wait for it to come to you, and I'll talk to you guys tomorrow, my guys. Peace out. That's hilarious.